there, boys and girls and traders, traderettes. This is Dr. Greg McLeod from Elite Traders University. It's time for a brand new edition of Bulls versus Bears Weekly Forex Forecast. So let's go ahead and get started. I'm going to go ahead and share my screen with you. Hope you guys had a great weekend. And after a big non-farm payroll, 187,000 jobs created versus the 207 expected, and also the previous numbers revised down as well. So it looks like the economy or the job growth is slowing because of Fed rate hikes, which is what they actually wanted, because they want to slow inflation. And we'll talk more about that, how it affects the currency market in just a minute. Let me go ahead and share screen number 2 with you. Okay. This is a presentation of Elite Traders University. And again, the weekly Forex forecast, Bulls versus Bears for this week beginning August 7th, 2023. Again, my name is Dr. Gregory McLeod. I'm Chairman, CEO of Elite Traders University. We are an organization, a company devoted to helping traders become professional traders in 90 days or less using our proprietary system. I've had 30 years in trading the markets, working as a currency analyst and a trading coach at one of the world's largest forex broker dealers in the world. Also work for a top tier bank and also trading desks in California. So I have years of experience that can help traders shorten the learning curve, make more money faster with more accuracy and more confidence. Okay. So go to www.elitetradersuniversity.com to find out more. Lots of free resources for you there. Okay. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And with that, again, I've been doing this over 28 years, and I'm one of the foremost authorities of short-term day trading called scalping. And I've also created the Trend Spotter system, the Pip and Run system, and the new system, which I'm very excited about, is the Forex Power Trader system and the 6-week boot camp that goes along with that. And I'll talk more about that at the end of our broadcast. But I've been doing this for a really long time, helping people pass their prop challenges to reach their financial goals, especially as they get older. And with, your IRA is getting, your 401k is not okay, and 0K is not okay. We can help build that back up by teaching you a way of compounding your money quickly, repeatedly, using compound day trading. Okay. All right. We're going to be talking about the US dollar index, the euro dollar, pound dollar, Aussie dollar. We're going to talk about the majors, gold, silver, oil, S&P 500. But we're going to start with the economic calendar. And let me switch over to a channel 2, right? Channel 1. Okay. And we're going to go to my market heat map. Is my top secret tool for anything about the market. It's like my all-purpose Swiss Army knife. I don't go anywhere else because everything is there. There's heat maps, of course, for all currencies, also stocks, crypto, and indices and commodities as well. Green means uptrend, red means downtrend, gray, stay away. And we're in early Asia, and guess what? Things are kind of moving sideways in Asia session. But what the important part is, we want to look at the economic calendar. The economic calendar is very, very, very important. Even before the technicals, we want to go to trader tools, lots of tools here. Financial news, Forex TV, currency correlations, Forex calculators, liquidity, sentiment. But I want to focus on the economic calendar. The economic calendar, I call it fund with flags. Remember the show with Big Bang, Fun with Flags with Sheldon and his girlfriend Amy? Well, I call this funds with flags, because we look at flags and we know what to trade. Knowing what to trade is one of the most important parts of trading. If you're trading the wrong thing because you like it, or because your favorite, or it's maybe it's something that you first learned on, the market doesn't care what you like or what your favorite, or it's the only period that you're working with, or the only period you're focused on, because the market is going to be moved by economic news. And so the party is where the flags are. And we're going to start off on Monday. We're going to start off with Swiss unemployment rate, high impact item. I sorted these, I filtered these out. You can have low impact, medium impact, high impact, and even no impact items. I'm going to focus on the high impact items because that will give me the most volatility. We're volatility junkies. We, as day traders and scalpers, we live for volatility. It's like the wind in our sail. Now, too much wind, like a hurricane, can tear you apart, right? Like in a non-farm barrel. But we need some type of interest of people are interested in a particular currency that's news driven. And if you ever watch Trading Places with Eddie Murphy and Dan Aykroyd, remember they're trading the crop report. They're trading frozen concentrated orange juice, which you can actually trade. And that news was driving prices, and Eddie Murphy and Dan Aykroyd were putting in orders and things like that ahead of the big announcement. And the big announcement created this interest. The Clarence Speaks having the crop report. So they're thinking all these are crop reports and all these, but for different currencies, not just frozen concentrated orange juice, but for the pound, for the euro, for the dollar Swiss, for dollar CAD, based on the country, the Aussie dollar. So we're looking at the Swiss franc, got like a little cross there. Cool, that's a cool flag, a cross on it. And so we want to look at the Swiss franc, look at dollar Swiss and see what's going on. And that's going to be active 1:45 a.m. About an hour and 17 minutes away. This next news item coming up. Then after that, 20 hours from now, at 8:30 p.m., we're going to have the Aussie dollar. The Aussie news are going to come out for Australia. Westpac Consumer Confidence change. So we don't care. You're looking, well, Greg, there's numbers here. I don't understand any of this stuff. It's not important. Look at the flag, and it tells you that's where the activity is going to be in the market. So this is when you use your technical indicators, use your strategies, whatever. If it's not pip and run or not a Forex power trader system, if it's not any buy systems, whatever system you use, instead of just blindly picking a currency pair and applying your strategy, look at these currencies as news approaches, right? Maybe you don't want to trade during the news item if you don't have a great strategy. Wait an hour afterwards, and you'll get lots of volatility and lots of stuff to be able to trade. You'll see setups unfold after the news announcement an hour later, or leading up to it if it's days away, because the big guys are going to position themselves. People, I use order blocks. I use this. All you got to do is look at the economic calendar. That tells you where they're going to go, right? There's GDP, there's UK GDP coming up on Friday. You guess what? The pound is going to be in play all week because those guys don't just willy-nilly think, oh, I'm going to trade the pound on Friday. No, they're putting money in and building positions starting on Monday, and maybe they started last week, and they start piling in positions in anticipation of this Friday announcement. We have a GDP year on year, GDP growth rate, quarter on quarter, all that going on. So this is how you create your watch list. Just look at the flags. Okay, you got the Swiss franc is in play. Aussie dollar is in play. There's an Australian flag. The Chinese, well, we don't trade the Chinese renminbi or the yuan, Greg. What do you mean about this one? Well, guess what? We have a proxy. A proxy is something that takes the place of. And so we can use the Australian dollar and the New Zealand dollar as proxies for the Chinese currency, okay? So usually if the Chinese currency is doing, or the Chinese economy is doing well, then Australia and New Zealand, since China is their largest trading partner and they're in the same part of the world, then they usually act along the same direction as the Chinese currency. So you can trade the Chinese currency by trading the Australian dollar and New Zealand dollar as a proxy. So Chinese news is going to be very impactful. So we see we have balance of trade coming out. It's supposed to drop from 70.62 billion to 69 billion. And, they're having some trouble over there economically. There's supposed to be this big COVID opening. The reopening of China was big anticipation that, oh my God, China's coming back. They've got the grip of the COVID restrictions, and we're going to make money again. We're looking at 10 and 12% growth rates. And that didn't happen, guys. They got 5% single-digit growth rates, high unemployment in their youth, and a whole commercial property thing that's going to blow up in their faces. That is requiring the government to step in. So the Chinese miracle is not going to bail out the global economy. And so guess what? The New Zealand dollar and Australian dollar have been taking it on the chin, right? If China catches the cold, Australia and New Zealand will catch the flu, okay? So moving right along, we have on Tuesday at 2 a.m., we have Euro CPI, and this flag. So that's not the European flag or the Eurozone flag. No, it's not. It's a German flag. So actually, Germany is one of the largest economies in the Eurozone, and consumer price index CPI. And when I tell you, if you see I, think of inflation. This is consumer price. This is inflation. Okay. And they're thinking that inflation is going to rise from 116.8 to 117.2. That's a rise. And so that would mean that that they might hike interest rates in order to fight inflation. And that could be help the euro pop up a little bit. Right. At 9:30 p.m., we're going to have Chinese inflation rate year on year, supposed to drop from 0 to -3%. And also New Zealand business inflation expectations follow up at 11 p.m. Supposed to rise, or actually fall from 2.79% to 2.5%. As they've been hiking rates too. Hiking rates is what central banks do to fight inflation. And it's so ironic. Rising rates actually makes things more expensive. So how can it make things cheaper, right? Very curious. Well, if people don't buy things because they don't have jobs because they got laid off because they're not selling any products, that's probably why, right? Now, big news comes out. U.S. news is Thursday, August 10th at 8:30 a.m. 8:30 a.m. is the usual news cycle for the United States, so for North American news cycle, right? And so we're going to top it off with U.S. CPI, the consumer price index, going to be very watched because, the Fed is data dependent. They're going to watch the data points. If they see inflation still hot, they're going to keep hiking rates. And they keep hiking rates, it makes the dollar go higher, right? So we're looking at the 305.109 and a rise to 305.805. That is the forecast. If that comes as so, we could see the euro sell off. When I say U.S. economic news, I usually trade the anti-dollar, which is the euro. Okay, U.S. inflation rate year on year is supposed to rise from 3% to 3%. That's a year-on-year comparison, and so a year ago, based on July, a year ago July. Okay. Comparison, we're higher. Core inflation rate, that's minus food and energy. Food and energy is very volatile. I don't know how they can calculate it without food or energy. I need food. I use a lot of energy. I saw my electric bill being here in Vegas. It was like $220. Like, okay, I think we're gonna get that fan out right now. So we're good. No, I don't mind heat walking around. I don't like heat being indoors. So I definitely run the air conditioner. Maybe it's iced in here. Okay. Ice, baby. Okay. We have inflation rate month on month, also coming out at 8:30. All these announcements are coming out at 8:30. And we're going to see usually a lot of volatility. The market's going to really move, really get jazzed up. 0.2%. It might not get too jazzed up for these numbers. Previous number 0.2%. They forecast 0.2%. Core inflation rate month on month, as comparing the previous month to this month, actually we've only gotten it to 0.2%. Okay, year on year is 3%, but month to month it's only 0.2%. So it tells you that really the inflation is not that bad, right? Initial jobless claims supposed to rise from 227,000 to 230,000. A higher number. It seems like the market loves more people unemployed. I don't know why. Maybe because people who invest in stocks don't have jobs and don't care, right? And the people who have jobs don't buy stocks. So who cares, right? And then we get to Friday of those UK numbers, lots of UK numbers, like 1, 2, 3, 4, 5 UK announcements. All GDP, and GDP is expected to rise from negative 0.4% to 0.5%. Growth rate, GDP growth rate quarter on quarter. The preliminary, actually a drop from 0.1 to 0, and the GDP growth rate year on year, flat at 0.2%. GDP month on month supposed to rise from negative 0.1 to 0.2, comparing GDP from the previous month to the month before that, right? Comparing June to July, right? So comparing June to July, things are getting better. Core PPI year on year supposed to drop from 2.4% to 2.3%. Remember, they're comparing July of 2023 to July of 2022. And core PPI month on month, that's producer price index, month on month actually rose from 0.1 to 0.2%, which is, if it's rising 0.1% for 12 months, be like 2.4% rise a year for the year, right? Which is where it is, right? Michigan consumer preliminary sentiment. Michigan consumer sentiment, 10 a.m. on Friday is going to finish it up. It's going to drop from 71.6 to 71. That's the forecast. Okay. And, consumer sentiment is still rather resilient. And in spite of all the hikes, the service sector remains strong. Okay. So now we've got the economic announcements out of the way. It's important to know what these are. Write them in your calendar. I'll remind you on social media, but make sure you set some alarms for these things, because what's going to happen, you're going to start trading, and you're trading at 8.29, and you're going to be in a trade, and all of a sudden it's going to go against you, and you're going to lose money, and you're not going to know why. And the reason it's going to be, little windows going to pop up in your head. It's going to be me saying, "Didn't you see the economic announcement? I told you to look at the calendar. Hello? Anybody there?" So you want to make sure you know. And if you don't want to say, "Well, great, I don't trade the news." Okay, if you don't trade the news, then don't trade around the news, okay? Stop trading. Stop trading. Because if you're anywhere within an hour or a half hour of news, your position is probably going to be in peril, right? A lot of people, they forget. I go, "Oh my God, why my position it's 8.29. Oh my God. I'm getting a Darth Maul looking candle of two lightsabers going, and you get whacked out of the market, right?" So even if you don't trade it or trade before it, just get out of the market at 8:30 a.m. Eastern time. Get out of the market make sure you're not around there at 2 a.m. the European news cycle, right? So if you're not going to trade around the news announcements, then make sure you're out and you're clear by the time they come out, okay? Just a word of warning, because I care, right? I do care. So let's go ahead and go on to, let's look at the technicals. Greg, enough of these economic announcements. Get to the technicals, will you? That's what we watch you for. Okay, but they work together. They work hand in hand, guys. And I was fortunate to work at a brokerage, and every Monday we had a meeting. And that Monday meeting, we all had to analyze a currency pair and the countries and the news that would impact the currency pair. We would have to know the story. And, my friend Walker he got the Swiss franc. He's like, "The Swiss franc, what are you going to talk about?" And he clocks and chocolate and exports. Like going, really? And they gave me the Eurozone, okay? Eurozone has like all these countries with all these economies, and they want to Greg's going to tell us about what's going on in the Eurozone. I'm like, "Oh my God," So I would talk about Germany, and I would talk about when England was part of the Eurozone. I would talk about France. I would talk about Italy, and I would talk about the GDP for each one of these countries. And everyone else is like doodling or on their phone or something, and I'm I'm exhausted, So I know the importance. I got the hardest one, which was the euro, and that made me a better analyst, right? I became a currency analyst, and the others stayed at their positions. All right, so let's look at the dollar index. I like to start with the dollar index. Dollar index is a basket of currencies versus the US dollar, and the dollar, people said the dollar was dead and they're going to stop raising interest rates, and all that selling of the dollar was a wick. And that can be called like a Pinocchio bar, because Pinocchio is a wooden puppet. Never take advice from a wooden puppet, right? Because basically it's like saying, "Hey, it's going down," but Pinocchio lies. The longer his nose is, the more lies he tells. So this long thing that says, "Hey guys, we're going bearish. Let's short the dollar." Oh, snap. Sorry about that, guys. So usually that's a bullish sign that usually price goes the opposite side of the wick, unless you have this Darth Maul wick over here where you have like dual lightsabers going, right? It's like, okay. So we get a long wick, we usually go the opposite direction. So that wick is pretty bullish because it's usually we go in the opposite direction of the wick. We also have a rising uptrend and price rebounded there. Small body candle will probably move. This is the monthly chart, right? We also have a downward trend line too. We can't ignore that along the wicks. And so we're basically in a triangle, the triangle in technical analysis is like a question mark. It's like, are you going to go up? Or are you going to go down? Right? So this is the question mark. If it breaks out, guess what? You are going up. Exclamation point. And if it breaks down below support, you're in a downtrend. You're going down, right? Exclamation point. Right now we're in indecision. We don't know, right? But based on this wick and the rising trend line, that we have two things basically saying that we're going to move higher on the monthly chart, right? We were in this range that lasted for like 6 months of sideways action before we had like what we call a bear trap. The bears got trapped in here and boom, they're like, oh, please come back down and get us out of here. And like, no, you're trapped. You're, no honey and no money for you, right, Mr. Bear? Go to the weekly. And you can see we're making some higher, we made tweezer bottoms at here, and we're making these higher candles here, came to the trend line, and kind of snap that in there. So we are working our way back in this range right after the false break, and we go back to 105.71 bulls versus bears. I am actually short-term bearish, but medium-term bullish. I think we get back to 105, right? We can go back to, we can even go down the daily chart, right? I mean, we got all kinds of resistance here, but after this, think of all these guys that got trapped here and prices are going up. They're not going to let these guys out. They're going, please come back down. I promise never to do this again. And so they're trapped. So they're going to keep pushing them up until they hit their stops. They got stops over here and they have stops up here. So they want to make sure that the people who are in control are going to like stop these guys out. They're going to try it. So they're going to try to fade the market, try and keep pushing it down. It's like, nah, we're going to take it up to the 200, and then we'll probably take it up even higher to make sure all these guys are cleared out. Right? And these guys probably double down here, and it'll be nasty. Okay. Anyway, bulls versus bears. We are bullish the US dollar. Go USA. Okay. Let's go to the euro, which is called the anti-dollar, right? And there's this negative correlation. And we got this line. We broke this trend line, came back down. Price is rallying. We're probably rallying to let me move all these lines, these drawings. Back to the monthly chart. Again, a long wick. We had a series of a range that lasted for about 6 months of range. Fake breakout. This is a bull trap, guys. Just the opposite. Everybody got long in a breakout. They breakout above resistance. Let's get long. All right, I got you. Boom, snap, bull trap. These guys are stuck. Somebody's name is on that wick, waiting for price to come back up, and it's not. They're going to keep pushing into their stops until they're stopped out, they're cleaned out. Many years are margin calls, and we'll come back into the range, maybe back down to 105.09 the euro. To the weekly chart, we can see like a 3 drives pattern, 1, 2, 3 into the 200 simple moving average, evening star candlestick pattern at the 200 simple moving average, and it looks like we're setting up for a drop. We're also probably hitting some Fibonacci resistance as well. Hit the 618 exactamundo, El Segundo. right? Boom, hit it, rejection, and prices coming on down. Come on down, like Bob Barker. Here's your 3 drives pattern. 1, 2, 3, right? And that's a weekly chart. Bulls versus bears. I am bearish the euro. Okay. I'm gonna bring back my visual effects before some people asked for it, right? And go, well, Greg, we do have higher highs and higher lows. Like, yeah, it's struggling though. First, right? So we may get a little bit of a pop up, right? We'll serve up, and then spike it down, right? I would look below 109. I'm totally bearish. Okay, moving right along. Let's keep it going, keep it spicy. Once we know what the dollar and the euro are going to do, we have a key to all the other currency pairs, right? The dollar's the driver's seat or the back seat behind these, where the quote currency, right? How many dollars make up a pound, right? Well, it's gonna get fewer dollars for pounds. This was the big Prince Harry or King Charles rally that I was talking about a while ago. And we've been moving up. We're moving on up like George Louisi. We have mean old bear trap that got the bears trapped. And you can't, the pound does not like being below 103, you know. And there's our traps. Sideways, trap. Oh, trap. So we probably see a move higher. Probably not now. I would think we might see a retest. They move my arrow down here. We might see a pullback down to support, maybe down to the 119 area before maybe going into the fall or late fall and winter. We usually see a dramatic rally in the pound going into past Christmas. We could come up out of here like a rocket back up to the about the 148 area, right? But I think short term until mid-September, we will be in a downtrend, right? So that's a monthly chart looking at a weekly, and you can see that we have an elongated kind of 3 drives pattern. And it took from here to here. This is from February to July. So we go from July down to about September, October, and before we take a move down, right? So that is bulls versus bears. Short-term bearish, medium to long-term bullish, especially after the Fed probably stops hiking rates. There'll be a lot of angry people thinking they're going to hike it to Christmas. There'll be a lot of traders can't buy that kung fu, the G.I. Joe, the kung fu grip, as Eddie Murphy would say, Christmas time, right? If you watch that movie again and listen to some of the stuff around trading, there's a lot of, they actually did their homework as far as you can hear the different market things. It's all funny and laughing. You don't pay attention. It's Eddie Murphy and Dan Aykroyd, but when you actually listen to what, like he's looking at the monitor and the prices are falling and rising, he starts talking it through. He's talking price action, guys. You should rewatch it. I know it's old. It's like 40-year-old movie, right? It's amazing stuff. It's 40 years old, right? Okay. Anyway, moving right along. Aussie dollar. Well, remember we got the China story, so I think Aussie and Kiwi probably fall a bit faster than the others because of this big. And did I stutter? Drawings. Look at that big giant candle. Big bearish candle. Yeah, I actually took it for 132 pips. It's like, really, Greg? You? It's like, yeah, amazing, huh? Because I don't hold anything that long. But I just saw that, like, oh my god, evening started a downtrend. I put a 10K lot on, close your eyes, and let it go, and you're up 132 pips. Why? Because you're you're moving along with the market tide, right? And that's what's is a seasonality too. If you look at, you go back to like July. Look, oh, this is, you look back here, we got two candle drop. I mean, probably not, that wasn't a very good example, but usually if you go usually around this time. We get this kind of a pullback of a couple of months, and then usually the dollar rallies. And so because we've got that, so our bias is already short, right? Why? Because it's the dollar. The dollar is a quote currency. How many dollars do you need to buy? Fewer and fewer dollars are needed because the dollar is getting stronger. Aussie is getting weaker, right? And then we're below the 200, which is already bearish. There's 200 trading days in a week, 221, I think, to be precise. And so that's why the 200 moving average is so relevant. One of the most widely watched technical indicators is the 200. And you can see while price kind of hangs down, it's like the report card, the average value, typical yearly value, and we can see that. And we can see that we're dropping, right? Higher high, lower highs and lower lows. We just had a significant low that we need to break, and that opens up a big door for this old low to come into challenge there. That low at 64.55 is going to be a telltale, because once we break that, we'll start running stops all the way down to like 62.77. We can see a 200, 300 pip move in the next few weeks. Once these buyers that are holding this, they got double top right there. We break that, then this gap, this airspace gets filled, and it'll be a very good trade, right? Especially if you want to do a prop trade, like my funded my Forex funds, and you put a trade on and let it run and let it drift on down, move on down. All right, let's go ahead and look at New Zealand dollar, NZD, and this is gonna repeat USD. We're gonna have a similar track. Right. We had a little down, still looking. I know we got this and we got a little bit higher there. Remove all drawings here, right? And we really haven't gone anywhere. We went to the monthly chart. We haven't really gone too far. Bearish, lower highs and lower lows. It's kind of like keeping people from getting totally bearish. So we have this double bottom, right? And the double bottom, usually we try to go for the top as a price target, right? So you got these guys who are maybe thinking that, hey, it's a double bottom, we should get back to the old high. But remember, we have a supply line that is, and then if you're watching the news, like talk to people, talk to other traders, and they go, oh no, I don't watch the news, no man, I just watch price action. It's like, yeah, but the big force is a negative Chinese economic challenge here that's going on, and you see something that's setting up bullish, and then you buy it. It's just going to trap you because you don't know what's going on, right? You buy the breakout, and then you get sucked into a buy trade, and then this thing just traps you. It's a trap, it has to. The Forex is a stop-driven market, so someone's stops have to be triggered, right? There's stops up here. These guys the guys who are short get stopped out, and then they buy, get trapped, and then they shoot it back down past this low, hit those stops. And these stops are sell orders, because you close out a buy with a sell to stop losing, right? So their protective stops are here. So they're not gonna this is not charity, they're not gonna give money away. They're gonna get paid. So they're gonna drive it into the liquidity up there, liquidity sweep, and then drop back down, click all those stops, and then those stops, those sell orders will push this down to the next level, right? So they're looking for where the stops are, and the stops will drive price in that direction. It's like all these stops got triggered, and price went back in the other direction, right? Because it was a full body candle, and now price goes back up, and then guess what? Everyone went short, placed their stop here, and now they're buying the position back, and the bears help fuel the bull rally, right? So that's this is a sample of the stuff that you learn when you enter into mentorship, and you enter into basically a partnership with me, capitalizing on my 30 years of experience in the markets. And so you can benefit from that. That way you can shorten your learning curve, trade with more confidence, and make more money. That's what it's all about, right? Okay. Daily chart, bulls versus bears. I am short-term bullish. We got a little morning star, so I think maybe Monday we go up. But then Tuesday, we get around the 62.24 area. I would be looking for shorts to break this low, take out 59.58. You know, not in the near future, right? Not right away, but yeah. So we have a little bit of a rally. We're just rally and drop and rally and drop and rally. So we got a little bit of a rally. So we're looking for a drop. Draw a trend line across your lows, and use your oscillators or other timing indicators to look for an entry to help you get in. And this is what I would do. I'm not telling you what to do, but this is what I would do. I draw a channel, trend channel, downward trend channel, and then I looked for some type of a zone to get short, so I can get into this market and ride this baby down. Right? I wouldn't try to ride it up because I don't know when it's going to turn around. But I know that if it hits one of these areas here, like it did here and here and here, if it gets here, then I can probably coast down for a couple hundred pips. Okay. Bulls versus bears. I am bearish Kiwi dollar by like really no Doug Greg. Okay. Dollar yen, USD, JPY. Don't know what I got though, Mr. Rabato. Okay. It's kind of weird what's going on over there. They're actually raising their interest rates, which is like something that they never ever do. And so we're seeing some really weird price action where, whoa, are we going to keep going higher? I mean, the whole idea is have a weak yen, but I mean, it's not like they're going to raise the rates a whole bunch, but they were negative 0.1, and maybe they get to zero. It's like, whoa, right? Monthly chart does have a uptrend higher, the north bias, a long bias. However, up until maybe recently, we've been seeing some activity in the bond market, and with them possibly hiking rates, and that has strengthened the yen. But we haven't really moved. So monthly, there's a weekly, walking it down, still looks bullish. We could see as the US dollar starts to rally, still, you think about the interest rate differential. I mean, you put your money in a US bank, you're gonna get 5.25%. You put your money in a Japanese bank, you get zero. What do you want? 0 or 5.25. So usually currencies will trend in the direction of the interest rate carry. So since the interest rates are higher in the US than Japan, then we continue to see this movement. People say, well, they're raising interest rates. They're like, yeah, they went from negative 0.1 to 0. It's nowhere near 5.25. And if they paid 5.25, their whole economy would blow up. Okay. So, and they've been like near zero. They were the NERP near negative interest rates. There was ZERP, zero interest rates. So they're going back to ZERP, zero interest rate policy. So, not NERF football. I said NERP, negative interest rate policy. So they're moving from negative to zero, which is a hike. And where would you put your money? 0 or 5.25 or 5.0 or any of the other currencies in the G8, which are paying over 4%. Okay, so bulls versus bears. I am cautiously bullish. I mean, there are people like saying, well, they're hiking interest rates, and you're going to buy the yen? Really? Okay. And the swap is crazy. You try to hold that overnight. I mean, it just got it crush it, especially on triple interest on Wednesdays. Okay, if you hold after 5 p.m., you get charged interest, daily interest, and it's triple on Wednesdays. And on yen pairs, it's nuts, right? To be long, if you're long yen against the carry, good luck. All right, I wouldn't. Let's go ahead and move on to another currency. Dollar CAD, USD CAD, the loony pair. Crazy, guys. Okay, monthly chart. Again, we haven't gone anywhere since that double top. But it looks like we are finally getting a little bit of life. We're getting a little bit of life. We're at the 1.3376 area. Getting a jolt from non-farm payroll, and continual chance for the Fed to continue to hike rates. And we bounced off. We have a morning star candlestick pattern at the 1.3095 area. We have an old high up here at 1.39877. So that's quite a bit away. Just on the monthly chart, we get back to the old high, and it's be tremendous. It might take a very long time. We're on the monthly chart, right? I mean, come on, Greg. Weekly chart. Well, weekly chart, higher highs, higher lows. We can see after a corrective pattern, we had a little corrective pattern to some support, and now we're kind of taking off, maybe breaking out. Daily chart, there we go. We are there at the 200 simple moving average, and still trying to work our way past that. And if we can, we get some airspace, we can probably get back to, there's some other levels of resistance here. The 136.47 area, it's about 110 pips away. The dollar continues on its tear. Seasonally, this is what the dollar does. It tears all these currencies apart up until about October, and then it just goes down from there. I think that could tie in with maybe Jerome Powell and the Fed. Maybe he'd say, hey, we're done with interest rates. We're done. We're good. We're at the 2% target. We're not going to raise, in the rest of 2023. Get something like that. All the risk on assets, all the currencies, Australian dollar, New Zealand dollar, everything goes higher. Bitcoin goes higher. Gold goes higher. Everything goes higher if the dollar can stop rising and if the Fed will stop hiking. But the Fed's not going to stop hiking unless they're absolutely sure that the inflation beast has been tamed. Okay. Let's go ahead and go to USD CHF. And that we actually have some news going on there. And let's see, we're on the monthly chart, and we can see that we spiked down, and long wick, not John Wick, but long wick. And there's like our Pinocchio bar, a little harami, kind of a bullish candle there. Usually that's bullish from a candlestick translation there. You can see that we're working our way up to the 87.73 area. We'll probably fill in. We're still below the 200 simple moving average, but we are moving up. Even if we have a downward trend channel like this, the top of the channel is far away, which could still be a profitable zone, right? I mean, we can get back up to 88, 86, which is about 90 pips away, right? So I am short-term bearish, actually. And then, once we get past Tuesday, usually it's manic Monday and then turn around Tuesday. So whatever happened on Monday, we usually turn around Tuesday. And then wow, Wednesday, everything goes good, Wednesday and Thursday. And then Friday is like Freaky Friday and everything turns back, Remember Freaky Friday, the movie with Jamie Lee Curtis, she switches bodies with her daughter, and the daughter becomes the adult. That's how freaky Friday gets with currencies. And sometimes I don't even trade Fridays for that very reason. Or I try and get out early before London and everything closes down about 10. But I'm actually going to be doing a webinar this Thursday dealing with the best times to trade currency. And so you really should tune in to that. It's going to be really cool. I'm going to be sharing with people for how to trade the markets. You can go to elitetraderslive.com/register, and it's called, the webinar is called Strategic Forex Timing: Decoding the Prime Hours of Forex. Discover how you can be in the room. And you can go again to elitetraderslive.com elitetraderslive.com/register. And you can join to see that. You're going to discover what you're going to discover in this free training, discover the peaks and valleys, learn about the most lucrative hours for trading, and when the market's most volatile. Time zone tactics, understand how global financial hubs overlap and what this means for your trading strategies. We're going to maximize profits, minimize risk, master time-based strategies to optimize your entry and exit points, safeguard your investments. Real-time analysis, we're going to dive into real-world examples showcasing how seasoned traders utilize timing for significant gains, and you'll be able to trade with confidence, equip yourself with the knowledge, strategies, and insights to make an informed decisions to stay ahead of the Forex game. Register for this one-time event Thursday, August 3rd at 8 p.m. Eastern Time. 8 p.m. Eastern Time, 5 p.m. Pacific Time. Let me go ahead and make sure we change that. All right. And let's get back to the charts, right? Okay. Walk it down to a daily chart. I mean, we're coming up on a possible break above this 87.73 area. I'm thinking this thing goes up, right? Bulls versus bears. I am bullish. Short-term bearish. We might trickle around there. So short-term meaning, I don't know, maybe like 12 hours, 24 hours. But medium to long term, I'm looking for the dollar Swiss to break out of this channel and actually move higher. Okay. All right, that does it for the currencies. Let's get into gold. Something that I've done in our winner's circle. We've had tremendous success trading gold. I have a handful of traders, and we have something called the winner's circle, and we crush the market. These are my advanced traders that have invested in time with me. We trade from 8 a.m. Eastern time to like 10 a.m. Eastern time, and we just crush it for a bit, and then come back and do it again, rinse, wash, and repeat. So it's a good thing. It's a fun thing. It's not for everybody. It's fairly it's a little on the pricey side, but again, to spend 2 hours with me, for 3 days a week, it's a bargain. Anyway, but I'm going to share here what charts we're looking at for this coming week. And for gold, all we do is trade gold. We trade some pound dollar on Friday for non-farm payroll, but primarily gold has been a lot of fun to trade, right? And especially we got this as a monthly chart. We've been messing around here in this almost like triple top, right? But triple tops are like unicorns, and this is looks more like a cup and handle type of formation. And usually a cup and handle, we see a breakout, right? We see a massive breakout. So I'm long-term bullish, but I'm actually short-term bearish gold. I'll show you why. Weekly chart, you can see that we were making higher highs and higher lows. Then we broke the trend line, and now we're making some lower highs and lower lows, right? We made a lower low, a lower high, and now we have a bearish trend channel. And so we could see gold go down, at least for the near term, right? Because gold doesn't pay any interest, right? And so it's a hedge against inflation if the Fed isn't hiking rates. But if you get 5.25% at a U.S. bank, gold doesn't pay any interest, so that's why it's going down. But once the Fed stops raising rates, then we're worried about, and people are going to start worried about inflation again. They can put gold back in their portfolio. So we got weekly is pointing down, and our daily is also following the trend channel down after rejection of that 1960 area, making some new lows. And we're looking at that 200 simple moving average, 1889 coming into play. And in the 1800s, like we're going back in time. We're at 2082, and then we're at like 2012, and then it's 1975. I was like, started hearing these years, and it's kind of nostalgic, like going back in time, right? These prices in gold and silver is doing the same thing. So that's gold. So short-term bullish, but I tell you, this will probably blow out the 2000 zone probably around November. Okay, so that is for gold. Let's look at oil. We'll look at WTI, West Texas Intermediate Crude Oil, Black Gold, Texas Tea, right? And there we go. And you can see that with a 6-week uptrend since the lows we hit around $67 a barrel, and we've just been clocking it on oil. And it's remarkable that it's going up, considering that we have a slowdown in China, but there, we've got sea drone attacks, attacks of Russian shipping, and Russia, out of the Black Sea area, they export oil via tanker, and if one of those Ukrainian drones hits a Russian oil tanker, well, then that's going to constrain supply. Plus, you have OPEC constraining supply too. So it's not a demand side equation where, oh wow, the economies are booming, so everyone's using oil. Like, no, it's a supply side where shipping is under threat, and then OPEC is manipulating price. So that's constraining supply, and supply and demand. If you have decreased supply and same demand or low demand, you still can have high prices. So this could keep going, and we could see a big move higher. I'm looking at my 200 simple moving average. Usually it's on every chart, and I don't see it. Are we below it? Are we above it? Well, you know what? It's probably this contract I'm using. Let's go to something like WTI. No, I'll go to weekly. Okay. And then the daily. So there we go. So we're bullish. We're higher highs, higher lows, a nice uptrend in oil. And with supply constraints and threatened attacks, we can see oil continue to move higher. Okay. All right. So let's get into the indices. S&P 500. We'll wrap things up with the S&P 500 and the NASDAQ and Bitcoin. SPX 500. We'll look at the CFD, and we can use ACAP. A lot of people trade ACAP, and our monthly chart, and we can see that we have didn't quite get back to the old high, getting a little bit of a pullback, right? We've been like several days down, and the worst week in the S&P index. We got to a high close to the 4632 area, and we just kept going up. This on a tear. Now we're pulling back. Still an uptrend though. Higher highs and higher lows, and we have our Harami there. So we may see some bargain hunters come in and take this up a little bit. So that's the weekly chart going to a daily chart, and we are hitting on some support. This is an old trend though. It's been going for a while. And if we can hold, this is one of those things where we're sitting on this demand line in this 4496 area, call it 4500 area. This area has to hold. If it holds, we can see a bounce right back up to the 4632 area, retest and maybe take out new highs, or take old highs and make new highs, right? However, if we break this trend line and there's it falls through the floor, we could see a big move, a big negative move. And normally we do see a pullback in the markets going, August, September, October, early October, and then we rally back up again. So a little ABC correction, a three-wave correction against the trend that may take us down like 43.24 would be helpful, right? Give everyone a chance to take a breath, and maybe buy back cheaper. So I am short-term, I'm medium-term bearish, but longer-term bullish on the S&P 500. I think we either stay in a range or we go down, because that seasonally, that's what has happened in the past. But the market can do anything it wants to do. Same here. This is the monthly chart. We almost came to the old high, 16,725. Just been on a tear, right? I mean, there's plenty of money to be made on that breakout. I know it might pull back and move sideways for a bit. Let's move sideways until October, and then come back and move towards the 1675 area. Let's go to the weekly chart, and we still have an uptrend. But will it hold? That's the whole idea. We broke this trend line and we broke this trend line here. Right. So now we're sitting here. So we're breaking lines, and usually we start breaking lines. It shows that there's weakness, we're breaking structure, right? We're there and broke, and then we got this big major line down here. That would take us down to like 14,318. That takes us back down to some old support back here that we had back in July. So bulls versus bears. I'm bearish NASDAQ. We had Apple missing earnings, and a number of other things going on. So maybe, and it's healthy. It's not something to panic about. If you're day trading, this is good. If you're a longer term holder, keep holding. It'll probably go back up. I would hold it. But I trade in and out of the market, and I'm looking for structure, lower highs and lower lows. We can break this low. We can break this low here, right? Because you can see that maybe 14,920. You break that, and we start breaking these other areas down too. Every little hump is a little stop zone where price was a little floor. Lots of little floors, right? And until we come back to this old trend line, that would be a nice place to re-enter. But there's plenty of moving in the sideways range. There's going to be plenty of opportunities to go long and short, right? If you go down the 4-hour chart, so you can just look at where we're setting up. We have top sides resistance, bottom side support. We kind of broke below that, and so we've got this double bottom at the 200 on a 4-hour chart, so we can trade this up and down until you finally get it to give up the ghost and drop, right? Usually price moves sideways for a bit before they make another leg up, or sideways and a bit before make a leg down. So depends on this trend line. If it holds, we come back in the channel, sideways movement, real choppy, right? This is like the rind of a watermelon or the bones of a chicken. It's like, hey, we're done with this. This is, you took this up, you made a lot of money. Now we're going to go in this compressed channel, low volatility, choppy. And scalpers, you have at it. You're going to be able to buy and sell and buy and sell. But if you're a trend trader and you're looking for trends, this is not the place to go for it. All right, guys, I want to thank you so much for being with me here in Bulls versus Bears, the weekly Forex forecast. I want to invite you that if you're looking for mentorship that gives you results, that's data driven, that has a clear system to help you become a professional trader, then come over here. We got a free masterclass. You can go ahead and check out our free masterclass, 4 Pillars to 6 Figures. You can register there, claim your spot, and find out more about what we do at Elite Traders University. See if it's a good fit for you. If it does resonate with you, if I resonate with you, my message resonates with you, and you're prepared to invest in yourself, then feel free to book a free strategy call with myself or a member of my team. I'd be more than happy to find out what are your goals, what's going on with your trading, and if we are able to help or not. We may not be able to help, but we can probably point you to some resources that can help you. And you have nothing to lose. The call is free, nothing for sale. The whole idea is to get clarity about where you want to go, what you want to do, and how to best proceed to achieve your goals. Okay, so that's what that's the strategy call. You can also, if you want, we have our free income boost blueprint. You can click that, and you can subscribe to our mailing list. And we don't spam you. We have lots of good offers for you though. Income boost blueprint, get that for free, and you can learn more about the Forex market if you're brand new. other things that we have available for you. We have our Forex baby steps. Forex baby steps is just $7, and it's a great. You get the replays of our weekly trainings, plus the Bulls versus Bears library, plus the Bulls versus Bears newsletter, and we've just added a Forex baby step course. All lifetime access for just $7. Become a member, and it's the best $7 you'll ever spend. There are no renewals. There's nothing else for sale. It's one time. We're going to just provide lots of good value for people that they can have access to help support them on their journey to professional trading. Okay. Forex baby steps. That's the number 4xbabysteps.com. $7 for a lot of good content to help you in your trading. Okay. And if you need my help and you're like, well, Greg, I can't afford your coaching, I got a special for you. $97. You go to Elite Traders University, EliteTradersLive.com/coaching, and you can talk to me for an hour for $97, and I can help you and get clarity about your trading. And you can ask me any questions you want about the market. This is for people who have never had coaching from me before, and it's not available to students. It's only available to brand new people. 1 call per household per calendar year. Okay. So with that, I want to thank you so much for being on the call, being here for the Bulls versus Bears. I wish you much success. God bless you guys. I love you. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!